In this video, we are going to talk about Bristol Myers Squibb stock. So before starting this video, please like this video and subscribe to this channel for our future updates. Bristol Myers Squibb Co., NYSE, BMY, is a large pharmaceutical company based in the United States. Its prescription medicine portfolio includes therapies for HIV, cancer, diabetes, cardiovascular disease, and psychiatric problems, among other conditions. Even before the epidemic, it had grown through a series of acquisitions to become a major pharmaceutical corporation. Although you may buy its pharmaceuticals, is Bristol Myers Squibb shares a good investment? Despite its strong resume, the government's Operation Warp Speed coronavirus vaccine program failed to include BMY. Although its CEO linked the company to OWS through supplementary initiatives, it did not receive the multi-billion-dollar research funds that its competitors did. Despite this, it accepted it in stride and continued to press for participation in the research and development that accompanied it. Bristol Myers Squibb is a Fortune Top 100 firm. Bristol Myers Squibb, which was founded in 1887, is a part of the S&P 100 and S&P 500 indices. It was one of the first corporations to focus on high-quality, pure pharmaceuticals, and it was a driving force behind many of the current rules. It grew through a succession of mergers and acquisitions of smaller companies in the pharmaceuticals, biosciences, and other related areas over the years. With approximately 30,000 employees, it is now one among the top 100 firms in the United States. The company has a large pharmaceutical and biologic product pipeline. Plavix, cardiovascular illness; glucophage, diabetes; Atripla, HIV, KENALOB10, inflammatory disorders; and Abilify are all BMY medications, for psychiatric disorders. It once owned brands such as Buffering, Excedrin, and Band deodorant, but has since sold them. The business has a robust marketing machine in place as well as global distribution connections. Many of its medications are multi-billion-dollar blockbusters, and the company has a large clinical development pipeline. Berkshire Hathaway was interested in the company and bought a large amount of stock. Is it too late for the average investor, or is it still a viable investment? Is Bristol Myers Squibb stock a good investment? Bristol Myers Squibb's average analyst estimated share price is $74.89. Buffett was likely drawn to the stock since it was trading at a significant discount to that level. The bullish bias in buy, hold ratings favors the bulls. It is rated a buy by 9 of the 16 analysts who cover the firm. The corporation offers a 2.91% annual dividend yield, or $1.96 per year, to income investors. The 49-cent quarterly cash dividend issued on December 10, 2020 is used to calculate this. This is a 4 cents increase over the previous dividend of 45 cents. BMY has a strong dividend payout history, with an average annual rise of 12.89% over the last decade. In 4 of the last 5 years, however, it has underperformed the S&P 500. It reported $10.5 billion in revenue for the third quarter of 2020, translating to 82 cents in GAAP adjusted earnings per share, EPS. This demonstrates the company's strong earnings from its current pipeline. Giovanni Caforio, MD, CEO and board chair, promised that the company's clinical trial pipeline would continue to succeed through 2021. Some optimistic analysts believe he will deliver on his promise and grow by up to 20% in the first half of the decade. BMY's revenues are threatened by patent expiration. Exclusive rights to certain treatments account for a large portion of Bristol Myers Squibb's revenue. Drugs are granted a patent after they have been clinically approved by the FDA, which gives them the exclusive right to sell the approved treatment for a limited time. Over the last decade, several of Bristol Myers Squibb's patents have expired, notably Plavix, the company's popular and highly profitable blood thinner. In addition, the company is frequently sued. Plavix was the subject of BMY's most recent class action lawsuit, which also named McKesson Corporation as a defendant, MCK. Its sales in the United States peaked at $7 billion in 2011, making it the country's best-selling drug. However, in the late 2010s, this and other lawsuits piled up, causing the BMY stock price to plummet in 2019. When other stocks rebounded with a vengeance, it barely recovered. It's one of the few pharmaceutical behemoths that hasn't received free money from OWS, making it an outlier. To stay relevant in the coming decade, the corporation may need to buy a vaccine company, and it's already behind the curve on the COVID-19 outbreak. Now that large institutional and retail investors are focusing on recovery equities, it may lose investor interest. It's a dilemma that might impact both BMY and its rivals. Bristol Myers Squibb, as a pharmaceutical behemoth, is in a league of its own, with few rivals. Those that it does have include industry behemoths like Johnson & Johnson, J&J, Merck, MCK, Pfizer, PFE, and AstraZeneca, AZN. Because they frequently contract manufacturing, distribution, and other rights among themselves, these businesses have a love-hate relationship. BMY collaborated on goods with a number of companies, including Gilead Sciences, Gilead, for their HIV medication. However, no potential coronavirus vaccine therapy included BMY, leaving the firm empty-handed. It came across as the unlucky little boy who wasn't chosen for basketball. While the company deserves an A for effort, it was unable to win the large OWS grants that could have expedited its future revenue growth. Is Bristol Myers Squibb stock a good investment? At present levels of $63, Bristol Myers Squibb, NYSE, BMY, seems quite appealing, as it is only up 40% from the levels it was at on March 23, 2020, when broader markets formed a bottom due to the spread of COVID-19. This is a significant underperformance when compared to the S&P 500, which has increased by 75% since its March 2020 lows, owing to the gradual lifting of lockdowns and the implementation of vaccination programs in many countries. This underperformance is mostly due to investor concerns about the company's long-term growth. Revlimid, the company's most profitable medicine, with sales of $12 billion in 2020, will lose market exclusivity next year, meaning a drop in revenues as generics gain market dominance. We believe, however, that the stock is now undervalued at $63. The underlying numbers may be seen in our dashboard, titled, "What Factors Driven a 21% Change in Bristol Myers Squibb Stock Between 2018 and Now?" Now, the company is predicting low to mid-single-digit top-line growth through 2025, which we believe is prudent. It's worth noting that Bristol Myers Squibb has already reached deals with a number of businesses, including Dr. Reddy's Laboratories, Natco Pharma, and Alvogen, to offer a generic version of Revlimid in limited quantities after March 2022. For example, from January 2026, the Indian pharmaceutical manufacturer Dr. Reddy's will be able to market its generic version without any volume restrictions. This basically means that Revlimid sales will not plummet in the first year after the patent expires. In fact, we believe Revlimid will generate $10 billion in sales by 2025, after which it will likely experience a severe decrease. Bristol Myers Squibb's Opdivo and Bristol Myers Squibb's Zeposia for ulcerative colitis are scheduled to be reviewed by the FDA for additional indications. If it can gain regulatory approvals for ulcerative colitis and inflammatory bowel disease, Zeposia's peak revenues may be north of $5 billion. Not to mention Eliquis, Bristol Myers Squibb's oral blood thinner, which has contributed over $1 billion in incremental sales every year since 2014, a trend that appears to be set to continue for a few more years. A U.S. District Court affirmed Eliquis patents in August 2020, with the composition of matter patent expiring in 2026 and the formulation patent extending until 2031. This means that Eliquis peak sales in 2025 might be north of $13 billion, up from $9 billion in 2020. Overall, we expect the company should outperform its low to mid-single-digit growth estimate through 2025. The corporation also has roughly $16 billion in cash on hand, so it wouldn't be shocking if it decided to make further purchases to improve its pipeline. Finally, consider the current market value. BMY stock is currently selling at $63 a share, or 8 times its estimated adjusted earnings of $7.50 per share for 2021. This is in contrast to levels of 15x in 2017 and above 10x in 2018 and 2019. J&J is valued at 17 times forward annual earnings, Merck is valued at 12 times, Pfizer is valued at 11 times, and Eli Lilly is valued at 22 times forward annual earnings. This supports our belief that BMY stock is undervalued at current levels, both in comparison to its own historical levels and to its peers. Bristol Myers Squibb is one of the oldest and most profitable pharmaceutical firms in the United States. It was founded in the 1800s and continues to operate today, offering specific treatments for a variety of diseases. However, when investors focus on so-called recovery stocks in the future years, it may lose its luster. What do you think about our video? Let us know in the comments below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button and turn on notifications before you go. Thanks for watching.